Good afternoon. Welcome to our weekly livestock market update. I'm Brownfield News Anchor reporter Megan Grebner. With us is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Today we're going to talk a lot about cattle, but before we get into those reports this week, let's start first and recap what happened in the markets.
Yeah, so if we look at cattle to begin with, I'd say we're going to call fed cattle down $1.50 for the week, although everybody's really been waiting for the reports to come out here at the end of the week, so it's been a pretty slow stream of fed cattle this week. When we look at the feeder cattle side of the market, overall feeder cattle were steady to 5 higher this week. Some heavyweight feeder cattle probably saw a little bit of weakness, being steady to 3 lower. Calves, on the other hand, 4 to 6 higher, but we didn't have a lot of trade in terms of feeder calves as well this week. The choice beef cutout value was down $4.80 for the week. We really had weakness across the board in terms of all the primal cuts that makes up that choice beef cutout. On the hog side of the picture, cash hog prices down $1.50 for the week. After a little bit of strength, maybe early in the week, we got some weakness here in the later couple days of the week. The pork cutout value was down slightly, down 60 cents relative to a week ago, and that is despite what was still a belly price that was $4.35 higher for the week.
Bellies are getting all the attention. I saw an article specifically talking about the bellies this week in the Wall Street Journal.
Yeah, absolutely. And, when you look at where belly prices have gone, although we can't claim all of the increase in the pork cutout value that we've seen in the last several weeks to bellies, it's been an important part of that higher pork cutout value.
Scott, before we get into reports this week, I know corn prices have gave back some of their gains today, but have been pretty strong throughout the week. How are producers, or what do producers need to take as we continue to monitor those prices and we look at a crop that's struggling for the most part nationally? I think the lowest crop report, or the lowest good to excellent ratings, if you take out the drought year 2012 in the last decade.
Yeah, so I like to remind folks that market information coming in the next few weeks is, I think, going to be critical to the path of where we go on corn prices. And when you start the week with corn futures sitting around 370 or so, and by the end of Thursday you're pushing $4, it tells you that we got a lot more movement or volatility in corn prices than maybe we've seen here recently. I think a lot of people are trying to anticipate what does USDA do in the next crop production report? Do they keep yields where they are? Because August is really their first chance to give us a look at what they're seeing from their survey results on yields. A lot of private analysts are already out there suggesting USDA will revise lower those corn yields. I just would want folks to not be too short right now in terms of feed supplies on the livestock side. We don't know what kind of crop we're going to get in the bin yet. You correctly have identified there's a lot of issues in some states with what appears to be a not as good of crop as we've seen in the past. But we know from now until we get to harvest that could all change. But I just wouldn't want to be short where I needed to get in the market very quickly and have to face what could be some run up in corn prices. Don't forget in 2016, what was some pretty short period where we had some dry weather got us 440 futures. I'm not going to say we're going to repeat that this year, but it's certainly not out of the question.
Scott, we've talked in recent weeks a lot about the relationship, or the ratio of box beef prices to the pork cutout value. A couple of weeks ago, or a couple of months ago, it was significantly higher than it is now. Let's talk a little bit about how that's changed and what that means.
Yeah, so it's a very good question that you pose. When you look at that choice beef box beef price in relationship to the pork cutout value, it's about 11 weeks ago that would have the beef side would have been 3 times the cost of the pork cutout value. And I think then we began to talk about this idea of featuring a pork ahead, and that there's more chance for pork prices to move higher and beef prices to move lower. And we've certainly seen that over these last 11 weeks. We now sit here this week with a choice beef cutout value that's only 2 times the pork cutout value. So things have moved much closer together. Perhaps we are going to be seeing the seasonal low in that choice beef cutout. We might be able to get some increase as we look ahead for the next few weeks. But those relationships have moved a lot and really are below where we started the year. When you look at early 2017, when we sat here at a 2 ratio between beef and pork, we were more setting around a 210 or so when we started 2017. So it does suggest to me that pork has certainly picked up a lot of steam in terms of price relative to beef, and we could see some substitution starting to happen again.
All right, it's going to be a pretty cattle-heavy conversation today. Let's start first and talk about the livestock slaughter numbers that came out yesterday.
Yeah, so we did get livestock slaughter yesterday, and I think we could just almost play the tape recorder as we've gone through 2017 here. January to June, red meat production totaled 25.4 billion pounds is what USDA told us yesterday. That's up 4% relative to 2016. So more beef and pork coming to market. When you just look at June by itself, June red meat production setting at 4.35 billion pounds. That's up 3% relative to what we saw in 2016. When you look at beef and pork individually for a minute, beef production in June up 4%. That was up 4% on slaughter. That was up 6%. So thank goodness weights were down 13 pounds in June. It helped buffer, if you will, that 6% higher slaughter number. I worry that cattle weights won't stay 13 pounds lower for the remainder of this year. On the pork side, pork production in June was up 2%. Slaughter was up 3%. On that side, you look at barrel and gilt weights, they were down a pound. I think that's also been helpful to the growth in pork supplies that we've seen this year. So the livestock slaughter report certainly continues to confirm to us that we're getting expansion in both beef and pork supplies here in 2017.
And maybe also re-emphasize the need and importance of trade, exports, and demand both here and around the world for our products.
Absolutely. If we're going to have to push 4% more red meat on the marketplace, and it all would have to go domestically, we know that probably happens with lower prices. So thank goodness exports have been strong here in 2017 and taken a load off of the domestic market.
All right, let's get into the cattle on feed report that came out this afternoon. I'm going to let you just get into those numbers because they are definitely outside of pre-report estimates.
Yeah, when you look at on feed and placed in June, both of those fell outside the range. We'll talk a little bit about the numbers here to begin with. If you look at on feed July 1st, USDA pegged those at up 4.5%. That's outside the range of pre-report that came in at up 2.1 to up 3%, and an average pre-report of 2.8. Now, I will start to say, I think when you look at what's been happening in these markets, many felt like a lot of information was beginning to be shed that would have suggested we were going to be up pretty hard on feed and placements as well. The placement side's the one that might get your attention. You know, pre-report estimates sitting there at 103.1 to 107, and USDA told us we came in today at 116. The average of the pre-report came in at 105.9. So we certainly placed a lot more cattle in June than many would have thought in their pre-report estimates. I think you can look at some of what's been going on in the Dakotas, for example, as maybe part of what's to be attributed to these higher numbers. I think we're going to continue to see perhaps more Mexican calves that have come into the U.S. that have been important to those numbers. But it certainly is on the bearish side, I guess, in terms of what we got from USDA in terms of cattle on feed report today.
Scott, as we look into those numbers a little bit deeper, we talked last week about we get a first look at steers versus heifers. When we look at that number, what are the big indicators there?
Yeah, so we do have good news when we look at that in particular, and maybe that's the only good news we have today for cattle markets from this report. But heifers made up 36% of the on-feed numbers that we got reported for July 1. The number that might stick out is that's up 11% in terms of the number of heifers on feed July 1 relative to a year ago. It tells me that in terms of the growth of females, we're slowing that growth. I would not want anyone to read into that yet that we have stopped the expansion going on in beef cow inventory, but that we've probably slowed the pace dramatically from the large gains that we saw in 2016. So we're moving in the right direction. And I think some of the lower prices that we've seen as we've gone through 2017 has slowed that rate of expansion, and the report gives us that information.
Scott, the USDA also released its cattle inventory report, and I know we've talked about this before. In comparison, it's a little bit difficult maybe to look at because we didn't get a report in 2016. So what are the numbers and what do we take from it?
Yeah, so if we first of all look, so total cattle inventory out of this July 1 report up 4% relative to July 1 of 2015. So we're doing a 2-year comparison because we don't have that 2016 report. And I remind folks to be very, very careful with the data that we got out of this report today. We really need to see that on an annual basis to draw too many conclusions. I do think it's fine to say, yeah, we got more cattle and calves than we had 2 years ago, and the report certainly confirms that. I don't think that's new information for the market at this point. I will say we get a little bit of information on calf crop that I think is important. So USDA has given us a 2016 calf crop of right at 35 million head, up about 1 million head from the 2015 calf crop. So 1 million head more calves we get to deal with. We're seeing that in terms of placements out of that cattle on feed report as well. But we also are starting to see some preliminary 2017 estimates from USDA. So they will suggest a calf crop in 2017 right now of about 36.3 million head. So another 1.3 million head of calves in that 2017 preliminary number relative to where we were in 2016. I think that assures we'll have more cattle all the way through the end of 2018 to deal with in the marketplace. So it continues to remind us that as we have more beef cows, we're seeing the results of that through calf crop, and we're going to need to continue to see pretty strong demand given what we're going to do on the number side. And you start thinking about what's happening to the feedlot industry, what's happening to the packing industry. It contracted in a very very narrow period of time where we were short on numbers. We're going to need feed yard capacity, and we're going to need packing capacity as we continue to grow those numbers in front of us.
And you saw another change this week. The Japanese trading firm purchased Creekstone Farms out of Kansas, which is a fairly large packing company here.
That's right. And I think, you look at some of the things that's going on, and it continues to remind you that some of these purchases are, I believe, companies that are looking ahead to the chance to even export more beef out of the United States. And the Japanese purchase of Creekstone, I think, certainly suggests that opportunity lies ahead.
I think I read that they're anticipating that much more growth with the reopening of the U.S. beef market to China. It was one of the analyst reports that I read today. So it'll be interesting to see how China plays into this global trade demand, especially for U.S. beef.
Absolutely. I mean, you can really get excited about what could come longer term for U.S. beef headed to China. But very difficult to, I think, project going ahead. But as incomes continue to grow and the interest in higher quality beef might emerge out of Chinese upper middle class citizens, I think we're set very well to fill that new demand.
Scott, anything else this week?
I think we've covered the major topics. A lot of cattle news here to end this week. So we'll wait and see how much negative we might see in markets when they open on Monday.
Plenty for us to discuss next Friday, and we'll make sure we move to the hog sector next week.
Absolutely.
Scott, have a great weekend. We'll talk to you next Friday.
You too, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, go to our website, brownfieldagnews.com. Click subscribe. You can also submit questions or comments. And for market updates twice daily, check out John Perkins' Market Minute. I'm Megan Grebner on Brownfield.